building approvals have dropped sharply and they're not going to keep up with our requirement as we keep bringing new migrants into the country. In this week's Property Insider Chat, I'm joined by Dr. Andrew Wilson to unpack the latest housing data. And it's really this tale of two markets. We're not building enough accommodation. On the other hand, retail spending remains surprisingly strong and auction clearance rates are rising, particularly in Melbourne, which is suggesting that Melbourne house prices are going to start rising further. If you want to keep up to date with what's happening, please subscribe to this YouTube channel and click the little bell icon so we can keep you informed each time a new show comes out. Australia's always been a nation built on immigration. It's one of the key drivers of our economic growth, our social diversity, and of course workforce replenishment. But here's the kicker. A strong migration program demands a strong housing strategy. You can't rapidly grow our population without preparing for where all those people are going to live. And in 2023-24, net overseas migration was 446,000 people. Now, sure, that's less than that staggering number the year before, but it's virtually the entire population of Canberra in 1 year. However, over the same period, the number of dwellings approved and commenced fell below the 2019-2020 levels. And that shortfall isn't a number, it's just showing up in our rents, our mortgage repayments, the growing queue of frustrated buyers and renters alike. And that's why here at Property Insiders, we regularly report building approvals, as we will today. Also, I want to discuss with Dr. Andrew Wilson our auction markets that are bouncing back and the strong retail sales that are defying gloomy consumer sentiment narratives. So what's really going on? That's what I plan to ask Dr. Andrew Wilson, Australia's leading property economist, in this week's Property Insider Chat. Hi, Andrew.
Yeah, good day, Michael. And we're well and truly into the month of May now, the merry month of May, do we call it not? But
yes.
So we've got all those diversions we had over April behind us. It's been a remarkable April because we've had a late Easter, which worked its way into Anzac Day. And then, of course, the following week we had the diversion of the federal election. So we have that all behind us. Of course, last week, the Queenslanders enjoyed their May Day holiday, but with the exception of that, we've got a bit of a clear run now, all the way through to, I believe it's called the King's Birthday holiday.
It is now, yes.
In June. I still can't get my head around that one, but that probably shows my age. But so we've got a big month now in May for property markets, no doubt about it. No diversions, no excuses. And, as you mentioned, Michael, the latest auction results are really laying the foundation for, a positive May going forward. And, of course, that's likely to be exacerbated by what looks, very much, another interest rate cut, with that decision coming next week. So all things pretty positive in the property market at the moment, moving into the middle of the year.
Well, it's positive that buyers are back and getting sentiment, sellers have got the right sentiment, but we just don't seem to be building enough accommodation, Andrew. What did the latest building approval figures show?
Well, as you mentioned, Michael, we've got too many people and not enough houses. It's the way of the world in Australia and the way of the world in other similar advanced economies that just can't keep up with demand. We've really, a long way back from what we need. So we do look at the latest building approvals data because, of course, that's forward-looking in terms of approvals. And it has been interesting, and we can see that in what we've been discussing here in recent months, Michael, that the trends are actually starting to change. They were pretty stable, the trend in new building approvals for housing over the past year or so. We did start to see a rise in house approvals, but unit approvals continued to flatline. That's really reversed quite sharply this year so far, Michael. We've seen a real acceleration in building approvals for units and a deceleration in building approvals for houses. So it's really gone, around about in terms of the trends. In fact, we're seeing some very big numbers in terms of unit approvals. And what we're seeing is particularly state governments very active in planning approvals for apartments, and particularly New South Wales and Victoria. Now, it's good news, of course, because we need more supply. That's really a no-brainer to say that. But and even though we are now seeing the trend in unit approvals rising sharply, unit approvals don't really become part of the housing market per se for a number of years. So, for them to actually become live-in completions. So even though it's good news, it's still, the good news is really projected into the future. And as you said, with our high migration, we're going to continue to see higher levels of demand before we, hopefully catch up on the supply side. But as I said, the other end to that is house approvals are starting to wane. But let's have a look at the latest data for March. Approvals were down 9.1%. That followed a reasonably flat February where they're up by just 0.1%. Again, it was that volatile series of units. They were down 15.1%, but houses down again, down by 4.5% over the month. And as I said, that trend is now starting to consolidate. We do see units. The reason we say that's volatile because you can get large unit developments coming through on a month-to-month basis. And that means you can get a very strong result one month and not so strong the next month. New South Wales was the top performer for building approvals for housing over the month, up by 19.6%. And again, that represented a very large development coming through, unit development coming through in Sydney. So even though the annual growth levels remain reasonably depressed, the quarterly trend is now starting to rise. But again, that's on the back of higher unit approvals. So over the month, units down 15.1%. But if we look on the year to date, that shows us that emerging revival in units, Michael. Units up 53.6% over the year to date. So that's over the first quarter of this year compared to the first quarter last year. And over the year on year, the full year up by 11.4%. So they're big numbers, Michael, in terms of a revival in unit numbers. But as I said, the issue is that these will not become, I guess, livable housing for a number of years, at least a couple of years at least. We can see that trend just starting to flatten a bit. The national trend is still tracking higher than where we were a year ago on the basis of higher unit numbers. And when we look at the unit versus houses trend for national housing, we can see houses now starting to wane, lower than where they were a year ago. National house approvals, but unit approvals, certainly, as we saw with that previous data set, that unit approvals are well ahead of where they were a year ago. And the breakdowns for the capital cities, as usual, Melbourne is the engine room for new home approvals, well ahead of all the other capital cities. But we are starting to see unit approvals in Sydney now, which were dragging along last year, now starting to accelerate, moving upwards towards that Melbourne number. And some of the strong results we've seen from the smaller capitals in terms of house approvals are now starting to look a little less strong. Perth still approving more houses than Brisbane, but the numbers are now well below Melbourne and Sydney in terms of house approvals. And similar to the national results, when we look at the change over this quarter, the first quarter of the year, compared to the same period last year, we can see a very strong result across the board for units in all capital city markets, particularly Adelaide and Perth, but they have small unit markets, so they come from a lower base in a sense. But no doubt there that it's an across-the-board revival in unit development, unit approvals, and I think this is, reflecting activation by state governments to get more supply coming through into the marketplace, because there is certainly political jeopardy for those markets that continue to have undersupplied housing environments, which of course means higher prices and particularly higher rents. And on the capital city long-term trends, we can see that trend is now starting to rise. Still down 30%, Michael, on overall dwelling approvals on a year-on-year basis, compared to the peak way back in 2016. But we are starting to see a very strong revival in unit trends, but still down 50% compared to that peak back in 2016. That's the trend, the annual trend for apartment building approvals, and houses. We're now just starting to flatten off the annual trend in house approvals. So same old, Michael, but really reinforcing what we've seen recently and have discussed, that it's unit development that's up and running now. And as I said, response to more activity from planning approvals from state governments, but house approvals not so good, starting to work their way lower.
As you said, it'll take a while for these units to work their way into the market, but I expect as interest rates fall and given construction cost escalations aren't as high now, where they're still going up, more developers are going to start getting into the market to develop these apartments.
Yeah.
Of course, they're going to be much more expensive. It costs a lot more to build a high-rise apartment with the cranes and the towers and unions compared to a house in the outer suburbs. But I can't see dwelling approvals and construction catching up with demand. Now, also, Andrew, there's been a lot of talk about poor consumer confidence and cost of living challenges, but the recent Australian Bureau of Statistics retail figures showed retail turnover rose over the month, and also actually rose considerably over the year.
Well, we discussed this, don't we, Michael? When we look at real economic statistics, real data, such as, retail sales versus some of those sentiment surveys, which, unfortunately we have a media that, works towards the mantra that bad news sells, and there's lots of bad news around, and always if you've got the choice between a good news option or a bad news option, the media will go with that bad news option. And of course, we've seen that with all the blather going on around about the US tariff policies, which have caused ructions in the share market based on nothing more than, bad news stories about the prospects of that new tariff policy. But we see the same scenario. Consumer surveys tend to be very negative, but the real data comes out and it's quite the opposite. And yes, we need to understand that higher migration and lower inflation add to the actual volume of sales, the value of sales. But nonetheless, these are strong results regardless of that moderating factor, and we're well ahead of where we were in the COVID or the post-COVID period. But and of course, the point is, Michael, lower interest rates will only fuel retail spending, and because you've got more money in your pocket. So what do? And we've got a very strong labour market, as we keep pointing out here. Even though it's not as strong as it was, it's probably getting to a more balanced position where it was, we could maybe say it was too strong there for quite a while. But and I think really at the end of the day, it reflects positive consumer sentiment, because why would you be going out spending more if you didn't feel well about how things were? So some very strong data in terms of the latest retail sales, that trend continuing to rise, and the annual growth rate trend is also on the rise, 4.3%, Michael, and that's well ahead of the 0.9% of a year ago. So some more good news for the Australian economy. So, as I said, with the prospect of lower interest rates coming forward, we should only see that being reinforced. But it does become a real head scratcher why the sentiment surveys don't reflect the real data, but that's what it always is.
I just wanted to remind you that this is not specific investment advice, because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event, so you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Well, let's talk about auctions now.
Yes.
And over the last couple of weekends, a Melbourne auction market has been the standout performer. Of course, it was always the auction capital of Australia, but for the last couple of years has been languishing. Yet it seems that sentiment, mood has changed in Melbourne, Andrew.
Well, it has, Michael, and we've discussed this at length, that Melbourne market, given its lengthy period of subdued activity following the COVID lockdowns, that it was an opportunist market, considering that its economy still remained, reasonably strong. There was no reason to see that lack of confidence in the Melbourne market, but it was certainly there and has been there. And perhaps that interest rate cut in February has been the catalyst to finally have Melburnians shrug off the doom and gloom and start to, rediscover their housing markets. And, we can get from time to time, I guess, particularly during the sort of the holiday period of the past month, some volatile results. But we've now seen 2 weeks in a row where Melbourne has had not just a stronger clearance rate, but the strongest clearance rate of all the capital cities, back to back, Michael. And from, more properties coming through as we're moving through past those distractive factors that we had over April and then into the election period. So, we're getting a reasonable test, and that will continue in coming weeks, Michael, of course, as we move into the heady month of May, which, ends the first half of the year in terms of property market activity. So if it can be, if it can consolidate these higher results, the prospects are certainly there for higher prices in the Melbourne market, as we know history tells us. And as you said, Melbourne is the most powerful in terms of activity auction market of all the capital. If clearance rates are rising in Melbourne and if they're pushing above 70%, history tells us quite clearly that prices will follow those higher clearance rates. So yeah, there we go. Melbourne 74.6%, Michael, similar to the week before, 74.8%, nearly 1,000 auctions. Well, maybe not nearly, but 819 auctions. Is a good test for the market. And I think when we look back a year, we can see that Melbourne market was trundling along in the mid-60s. It was also trundling along in the mid-60s to finish the year last year, Michael. So it's definitely made some progress this year. I think that the portents are pretty good going forward, that will continue. But that's why we look at the weekly data, just to give us that understanding. Another good result for Sydney too, 72.2%. It's been around that low 70 mark for most of the year so far. Brisbane a little higher, similar auction numbers in Brisbane, higher in Adelaide. It had a higher clearance rate at 67%. And a bit of a same old for Canberra, high 50s, low 60s in that Canberra market, which really continues to tease that it's improving, but the results really don't support that. And Sydney, like Melbourne, is tracking ahead of where it was at the end of last year and around about where it was a year ago. The difference with Melbourne now is it's well ahead of where it was a year ago, Michael. And it's been a good start to the auction year for Melbourne in relative terms. Certainly a better market conditions than it's experienced for some time. In fact, these are the highest clearance rates for a couple of years in Melbourne, Michael, pushing over 70%. Brisbane, fairly typical Brisbane market, around 50%. Not as strong as a year ago, which was a real boom time market in Brisbane, but we know Brisbane has a different auction culture there. So we tend to see typically lower clearance rates than the other capitals. Adelaide's been a little weaker this year compared to a year ago. We did see some weakening in the Adelaide home prices at the end of last year and into this year, but looks to be picking up again, but we need to keep a watch on that Adelaide market. And as I said, the Canberra market teases a little bit that it's moving forward, but really has remained in those high 50s, low 60s. And we do, as we always say here, we need to start to see clearance rates pushing up or over 70% in most of the capitals to be expecting prices growth as a result. So if you're looking for those auction clearance rates, they're available on my LinkedIn site every Saturday night. Doc Andrew Wilson at LinkedIn around about 6 o'clock. The full national report is presented by Michael on his various channels, which includes the regional breakdowns for Melbourne and Sydney and the top 10 auction sales in all the capital cities for the week. So interesting week, Michael. We've locked in our election result, and we move now into the real business of the May housing market, with perhaps that strong driver of another interest rate cut. But that's something to talk about next week.
It will be. It seems like the property pessimists have gone back into their caves, Andrew. The media clearly is one of the major factors that drives consumer confidence, either confidence or pessimism. And even the media is now more confident about our housing markets. It took them a while to catch on.
Yeah, like about 20 years, but that's another story, isn't it? But, they do it tough, the media, and they are, and I'm quite seriously, about that. And they know that they have to have headlines that will attract clicks, and, that's their job in a tough environment, a tough corporate environment for the media. It's just a question of whether the consumer out there buys into it. And I think Australians still remain pretty positively connected to their aspiration for home ownership and home investment. And all our results continue to tell us that. And they have told us that, Michael, haven't they, for a long time.
Okay, look forward to catching up next week. There'll be a lot more news. We're back each week for this Property Insider show.
Thank you, Michael.